Hey, it's Clay Trader, and this will be a video chart on ticker symbol FOLD. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to use this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. So this chart is actually, has a very interesting setup to it right now. Now, I fully realize if you bought before today, there's nothing that I can say that would make you think bullish or anything like that. So any terminology that I use that implies, bullishness, keep in mind, I'm just talking about what's happened since, the gap down this morning. And the way to make this the most sense is we got to first start on the daily time frame, and I want to scrunch this up here a little bit. So daily time frame, meaning each one of these represents 1 day's worth of price action. And what I want to get into place here is that area right there at $5, and just want to make sure. Okay, so $5, keep in mind, what $5 represents. Essentially the lowest it's been in literally months upon months upon months. So that's where that green line's coming from, and now we'll zoom back in, and I just wanted to offer some perspective on all that. So there we go. So there's that green line. There's $5. There's where it's coming from. And there's a foundational principle in charting, just a very basic rule that states when levels of support are broken and closed below, they tend to act as resistance. So as we demonstrated, that was a level of support, but now, as you see on this time frame, the price is well below it. So this would be considered an area of resistance. So on any sort of bounce, $5 is definitely going to be that first key test to kind of measure the strength of any sort of bounce. Meaning if the price heads up and then gets, hits there and then then gets rejected all the way back down, well, obviously that bounce wasn't very strong. Why am I talking about a bounce? Well, that's where the final 30 minutes, again, each one of these represents 30 minutes. And the final 30 minutes you can see right here, absolutely massive volume right here. And then on top of that, got what we would call in the world of charts a nice little hammer candle. Now, I wish the market was as easy and I could say, well, because there is big volume and because there is a hammer candle, this thing's bouncing up to, $6 tomorrow. No such thing as a guarantee. Would I be shocked to see some sort of bounce tomorrow? I would not be shocked at all. So we'll see what happens. We'll see if this, big volume and hammer candle means anything or not. But again, any sort of bounce, that first big test, right up there at $5 for the reasons we've just discussed. So we'll have to sit back and see how this one unfolds tomorrow to close out the week. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.